Ladies and gentlemen, good day and welcome to the Q4 FY24 earnings conference call of Arvind SmartSpaces Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Sharma from Adfactors PR. Thank you, and over to you.
Thank you. Good afternoon, everyone, and thank you for joining us on the Q4 and FY24 results conference call of Arvind SmartSpaces Limited. We have with us today on the call Mr. Kamal Singhal, Managing Director and CEO, Mr. Avinash Suresh, Chief Operating Officer, Mr. Prakash Makwana, Company Secretary, Mr. Divyang Kansara, Head Finance, and Mr. Vikram Rajput, Head Investor Relations. Please note that a copy of the disclosures is available on the investor section of the website of Arvind SmartSpaces Limited, as well as on the stock exchanges. Please do note that anything said on this call that reflects the outlook towards the future, which would be construed as a forward-looking statement, must be reviewed in conjunction with the risk that the company possesses. I would like to now hand over the call to Mr. Kamal Singhal for his opening remarks. Over to you, sir.
Thank you. Thanks a lot. And very good afternoon to everybody. Thank you for joining us today to discuss operating and financial performance of Arvind SmartSpaces for the quarter ended 31st March 2024. The Indian economy has continued to show remarkable resilience, and its performance has had a profound impact on its real estate sector. As we look back at the year which concluded and envisage about the future, the landscape of Indian real estate sector appears to be both promising and dynamic. The trajectory that the sector has embarked upon over the last few years set the stage for unprecedented growth and transformation. With each passing year, the prospects of real estate sector in India firm up, guided by shifting demographics, technological advancements, and policy interventions. Preferences have evolved across all segments, from affordable housing to luxury properties. MIG and upper MIG now encompasses smart homes, sustainability, and community-centric designs, reflecting a shift towards integrated lifestyles. What provides optimism about the organized real estate companies consistently outperforming the unorganized is the vast sectoral room waiting to be converted. Around 80% of India's real estate sector continues to be unorganized, as more home buyers seek to buy into integrated complexes as opposed to standalone homes built by unorganized players. We see the share of organized sectors in India in the real estate sector growing faster. The noteworthy improvement in our FY24 performance is due to this widening opportunity for organized real estate players, and more importantly, ASL's ability to capitalize on this transforming sectoral reality. We are pleased to share that FY24 has been a landmark year for the company, with milestones achieved across bookings, collections, and business development. The company has recorded the highest ever annual booking of rupees 1107 crores, a growth of 38% year-on-year. Then Arvind continues to be received strongly by the home buyers across new micro markets. Our new launches, including Uplands 2.0 and 3.0, Forest Trails, Arvind Orchards, and Rhythm of Life contribute to around 70% of our booking value for the year. Our Bangalore presence remains very strong, with booking value of rupees 420 crores, contributing to 38% of the total annual bookings. From a quarterly perspective, we had booking of rupees 323 crores, a growth of 32% year-on-year. We launched Arvind Orchards in Bangalore in Q4, where we sold entire release inventory for a sales value of around 163 crores within 7 hours of its launch. Further, we launched Rhythm of Life at Lakshmanpura in Ahmedabad towards end of Q4, where we achieved a sale of 70 crores within Q4, which was 75% of the launch index. Over the years, ASL has deepened its competence and insights into horizontal property development niche. The company is being recognized as amongst the thought leaders in urban life quality. It is being respected for developing design to inspire homes. It is being recognized for its capacity to create a market and then occupy the largest share therein. ASL constructed world-class clubhouses first within its plotted developments, creating a very significant traction for the home buyers. The result is that every single of our properties has enjoyed a post-launch momentum and traction that has only grown. This has helped us generate progressively better realizations. Additionally, the result of this positioning is that our customers have become our biggest market agents. In FY24, 22% of our overall bookings came from referrals. FY24 marked an orbital change in our business development efforts, and we acquired new projects with an estimated top line of 4,150 crores against a total of 930 crores that we achieved in the financial year 23. We have added 4 new projects in Ahmedabad and 1 each in Bangalore and Surat. We look forward to sustaining this momentum in coming years, as well as to some extent repivot towards the development of apartment projects. I would like to mention here that while all the launches during the year were largely horizontal, the deliveries were majorly in vertical high-rise apartments. So historically, we have developed both horizontal and vertical real estate and will maintain an equilibrium between the same going forward. Financial year 24 collections are at 876 crores, a growth of 46% year on year, which are the highest ever in the company's history. Quarterly collections too were robust at 215 crores, which has shown a growth of 14% for the quarter. This performance is a result of efficient execution of the virtuous process of sales, registrations, construction, and delivery. Now, moving on from operational updates to the financial highlights, FY24 we've reported a revenue of 341 crores, up 33% year-on-year basis. EBITDA grew at 57% to 85.5 crores. PAT for the year 24 grew 62% to 41.6 crores. In Q4, we reported a revenue of around 117 crores, up 27%. EBITDA grew by 38% at 28.6 crores, and PAT grew by 67% to 15.5 crores. Our balance sheet position remains very strong despite expanding operations. Net debt stood at negative 41 crores as on 31st March 24, from a net debt position of negative 30 as on March 23. A crucial parameter in real estate reflecting the underlying business performance quite well is operating cash flows. Strong collections and profitability resulted in a net operating cash flows of 458 crores for the financial year 24 and rupees 98 crores for the quarter 4. We estimate an unrealized operating cash flows exceeding rupees 2,563 crores coming from the current pipeline of projects. As a company, the focus always remains on shareholder value creation. We are happy to inform that the board of directors have recommended a final dividend of rupees 2.5 per equity share and a special dividend of rupees 1 per equity share, totaling a dividend of rupees 3.5 per share of a face value of rupees 10 each. This marks consecutive years of dividend distribution for the company. To conclude, with an all-time low inventory overhang and a decadal high average pricing growth, demand optimism in the residential market is likely to continue in the medium term. At Arvind SmartSpaces, the virtuous cycle, the sustainability of growth is derived from the fact that outperformance during the last financial year was not a result of a temporary arbitrage. It was the result of a systematic maturing of operations and business. The complement of processes, systems, protocols, priorities now represent a base that will be scaled up within the prudential financial discipline. We also believe that should any outsized opportunities emerge, we'll be equipped to leverage the under-borrowed nature of our balance sheet. In view of this, we are optimistic of sustaining our momentum of raising our game should the realities warrant. We are set to further deepen our presence in Gujarat, Bangalore, and the market of Maharashtra. With this, I'll ask the moderator to kindly open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, good afternoon, sir. Congratulations on very strong operating performance and strong booking and collection level. So my question is, with respect to last year we had 4 launches. So how many launches you are seeing in this year in terms of our upcoming launches, or in terms of BDs? We had done very well in FY24. So what is your BD target? And thirdly, on HDFC platform 2, we have only 3 projects. So what is the total investment till now? And this year, what is your target on HDFC platform 2? Thank you.
Yeah. So, 2-3 questions really. First one is in terms of how many projects we are anticipating to launch during the year. The answer could be that yes, last year we had 4, and we should be doing anything like 7 to 8 projects launch this year. It could exceed this number as well, but 6 to 8 projects is the minimum we are looking at launching, which includes phases, new phases of the existing project and all new projects that we have in our pipeline. The second question was related to HDFC platform. Yes, I mean, there we have deployed around 300 crore rupees of money. In fact, a couple of projects have already been executed and being paid back HDFC as a fund. The total opportunity that we had in the beginning of the year was around 900 crores, and out of which only 300 crores have been deployed. We had 2 targets when we started the year. It was about adding 4,000 to 5,000 crore rupees of worth of projects, which we did actually. Now, while doing so, 3 things happened simultaneously. One is that we ended up consuming 300 crores from the HDFC platform. The other is very, very strong internal approvals which we saw in excess of 400 crores have been generated, and broadly that entire amount has gone into acquisition of newer projects. So in any case, we ended up deploying around 700 crores in new projects, including the HDFC platform already. And on top of that, we had a very heavy mix of JDs that came our way. And these are very interesting projects, large projects, long-term value creating projects, where the margins are good and the capital deployment is pretty lean to that extent. So on one hand, we could achieve our target of creating the pipeline, and on the other hand, the cost of capital has been kept at a very low levels, and we underutilized the HDFC platform to that extent. Idea is to exhaust the platform this year. And obviously, this money which has been spared should get deployed in this coming year.
Okay. So the 700 crore remaining maybe because we had a good internal approval, so we have gone our own, and not many projects have been launched in this HDFC platform. So this year we may target to deploy all that, right? And what is our pre-sales target for this year?
Target for BD?
BD as well as pre-sales target for FY25.
So as a generic this thing, we know that in almost all our calls, we communicate and target to grow by 30 to 35% in all the major operating parameters, when it maybe it is top line, EBITDA, etc., and that should hold true for BD as well. So we've achieved 1,100 plus crores worth of fresh sales this year, and we should grow 30-35% this year as well. We achieved more than 4,000 crore rupees of projects, new pipeline this year, and that should also see something similar in terms of growth for the current year.
And lastly, the more acquisition will happen in vertical side, or how, as you said that we want to maintain a balance. So
end of the day, it's about having projects which make sense both from the top line, bottom line, return on equity, return on time, return on effort, return on bandwidth, etc., etc. So as such, we are open to both the categories. It has so happened that horizontal is a little heavy for the last couple of years, but having said, we are equally focusing on vertical as well. As we speak, there are a couple of very, very interesting options being evaluated and finalized. So you will see a good amount of vertical projects getting into the portfolio very soon. So it will be, I mean, as far as the target is to keep a balance, and you'll see that balance coming back in the coming quarters.
Thank you. All the best for future.
Thank you.
Thank you. We'll take our next question from the line of Pranav Manohar from Robo Capital. Please go ahead.
Hello. Am I audible?
Yes, please go ahead.
Yeah. Hi, sir. First of all, congratulations for the good set of numbers. My question is, so on the reported basis, what will be our revenue and EBITDA margins for 25-26? If you could, provide any figures.
So we don't give any specific guidance on the financial numbers. From MIS point of view, fresh sales, etc., can be understood from the growth that we are targeting per se, which will be 30-35%, I mean, in general sense. But, I mean, in that sense, we don't really give any guidance for the P&L and the financial numbers.
Okay, so 30-35% is applied to basically all the major metrics, right? Is that right?
That's how we have been. That's how the track record has been. That's our effort, and that's what we'll strive to continue to do. Yes, for sure. Yes.
Right, and this is reported basis, right?
I mean, operating and reporting both. Yeah.
Okay. Thanks.
Thank you. We'll take our next question from the line of Ritvik Sheth from One Up Financial. Please go ahead.
Yeah. Hi. Good afternoon, sir, and congratulations on a great FY24. So few questions from my end. Firstly, sir, one of the projects, Arvind Fruits of Life, you mentioned in the presentation that we had acquired it and turned it around and given the exit to HDFC platform too. So just wanted to understand on this project. I believe this is the first project that we have already returned the capital to both via the HDFC platform too. So just wanted to understand what kind of IRRs did both the partners make on this, and on that, mainly on the IRRs. If you can give us some color, that would be helpful.
So, I mean, Ritvik, as you very rightly said, we gave exit from platform 2. This is the first exit. Although just before that, we gave HDFC exit from the first platform itself, where we did one very large project with the name Arvind Greatlands. While the project still continues to grow and sell and give us very healthy positive cash flows, HDFC platform has exited from there as well. So all in all, between platform 1 and 2, we have now given exit to 2 projects out of the 3 that we've taken up in a fund way from these 2 platforms. IRRs is a specific information that we don't intend to share. That is not still there in the public domain, and hence it will still remain like that. But having said that, they have made decent money. Obviously, they have achieved their intended and kind of expected IRRs. And with the sweat money, with the kind of arbitrage that a developer should have expected, we made disproportionate money on the share that we contributed when it came to investing in the project. So all in all, it has achieved and more than achieved all its intended objectives. But to specify IRRs in specific is something which is confidential between the partners, and hence it can't be shared.
Sure. Not an issue. Sir, where I was coming from was, one of the reasons was the OCF to pre-sale for Arvind Smart is about 40% in FY24. And if we look at other peers who are, majorly into vertical high-rise, are anywhere from 20 to 30%. So we are, significantly above that figure. So would you attribute that higher OCF to pre-sales because of the horizontal plotting? Would that be a fair understanding? And the IRRs in these would be far higher than the residential because the time taken to turn these projects around is significantly lower. So just wanted to, I was coming from that angle. So just wanted, your thoughts on that.
So, Ritik, you hit the nail on the head. I mean, this is perfectly the situation where horizontal projects, the way they have operated in the last few quarters, they are higher IRR for sure directionally, and they also generate cash flows in absolute sense little faster than the vertical ones. In fact, significantly faster than the vertical ones. Firstly, the lead time to launch itself is comparatively lesser, and then the payment terms are such that they are front-loaded rather than getting back-loaded, which is the case for the vertical. So to that extent, yes, the cash flows have been boosted because of significant component of their being of horizontals. But having said that, 40% cash flows are extraordinary. They are quite high. And of course, this is a result of what we launched, how fast we launched, and how fast we collected, etc., etc. And within a given period, what was the ratio of horizontal vis-a-vis overall product mix? While this is great and we have achieved something which is extraordinary in that sense, it might not be the same on an average basis for, say, 3 to 4 years put together. And hence, little first thing going here and things remaining more like a 25% thereabouts as free cash flow, more like a steady state situation, and that should how it should be counted. But yes, last year has been absolutely exceptional and great for us in terms of cash flow vis-a-vis things.
Right. Got it. Okay. And you mentioned that, we'll have a balance of vertical versus horizontal. So would it be fair to assume that 25-30% would be vertical and balance would be horizontal? That would be a good mix?
Yeah, I mean, eventually in the long term, maybe, might even be 50-50. And in the medium term, it might vary anything between 1/3 to 50% balance from this thing. So within a range of 33% to 50% vertical, the balance could change, could vary.
Okay. Got it. Sure. And sir, one more question is on business development. You mentioned that 30-35% growth, so that translates close to 5,000 crores. So what would be the deployment for this 5,000 crores projects to be acquired in FY25?
So I mean, it can be looked into from many angles, so to say. What is available to be invested is around 600 crores in the platform itself. Out of 900, we have 300. So 600 is yet to be deployed. We are sitting on a 50 crore odd positive cash, and we are hoping that we'll also generate 200-300 crore rupees of free cash again this year. I mean, just going by the averages that we are talking about right now. So almost 1,000 crore between SDFC, internal accruals, and little bit of a debt that will start raising this year, even if it is as low as 150, 200, 300 crores. So we are talking about something like 1,000 to 1,200 crores getting deployed through these three sources. And that should comfortably give us a top line of something which is 30-35 than what we achieved in the last year.
Right. Okay. And would it be just one last question? Would it be fair to assume that launches in the current year could be close to 1,800 to 2,000 crores, depending on the approval and whereabouts?
Yes. I mean, broadly, the number you're saying is within the range of variability that we also would have in the mind. Yes.
Okay. So that's it from my side. All the best, and thank you so much.
Thanks, Ritik.
Thank you. We'll take a next question from the line of Ronald Sioni from Sharekhan Limited. Please go ahead.
Good afternoon, sir, and congratulations on great set of numbers. Sir, on the BD pipeline, we have been a little bit slow during Q4, and yet we are talking about 5,000 crores in FY25. and we were also looking for a deal in Mumbai. So, if you can harp upon what, kind of deals we are getting and whether any Mumbai deal is likely in the near term, at least during H1 FY25.
Yes. As we said, we added little more than 4,000 last year. And as we speak, as I mentioned in the beginning remarks, we're sitting on some very interesting projects in terms of pipeline being created. Very decent progress already done on those 3 to 4 projects that we're talking about. They are still not announced because we still think that we'll cross the last hurdle of making sure that even the diligence side of it is all clear. But as we speak, the pipeline is very, very healthy, and we are very confident that a growth of around 30%, which makes overall pipeline to be more like 5,500 crores to be added this year, should be absolutely achievable, and enough and more funds are available. Of course, it all depends upon what is the component of JD, etc., which determines the amount of money which might be required to be invested. But having said that, even a conservative estimate of what will come our way in the form of JDs and outright, the money is more than enough. So we are all set. Mumbai, yes, we have been a little conservative. A lot of projects and a lot of options are being evaluated. We keep coming close to acquiring 1 or 2 projects every now and then. But it has not reached the finality, so to say. But we are very confident that within this quarter or next quarter, we should be able to acquire at least 1 or 2 large projects within the market of Pune and Mumbai put together.
Okay, great. And on the debt side also, 300 to 400 crore, what we were expecting to raise during this year. So this would be towards the fag end, or it depends on the BD acquisitions we will be doing.
So naturally, any debt raise is a function of BD, and it's also a function of how we prioritize our cash outflows. Till the time, obviously, we have internal approvals and surpluses already available, we'll absorb them first in the BD. Then comes the debt from the banks, because that's cheaper, effectively cheaper, and then comes the platform. So in this priority, we'll obviously consume these sources, and obviously it will be spread over the entire year. It's not going to be happening in 1 or 2 quarters. All these deployments to the extent of 1,200 crores that we're talking about, comprising these 3 things, will be spread over all the 4 quarters.
And lastly, on the Surat project, will it be launched during quarter 3 or Q4? And whether it would be in phases. I believe 1,100 crores would be the project size. So have you chalked out any plans with respect to the phases and exactly when it would be launched?
Because Surat is a large project. Of course, such large projects are normally done in 2 or 3 phases. The size of phases can change, and this is a little variable depending on what kind of response we get. So that's how it's going to be. We'll be launching 30 to 40% total inventory in first go, and then see how the market goes and what kind of tweaking, if at all, needs to be done in the product, etc. To that extent, we always remain flexible. But we would have dovetailed any flexibility to be incorporated into the product mix on a very handy basis. And we normally do it on a runtime, so that if the sales momentum is there, tweaking should not become a hindrance, and it should be a seamless kind of sequence, etc. So all that is being done. Idea is to launch it more towards end of quarter 2, which might spill over into quarter 3, early quarter 3, and that's how the plan is.
Great, sir, and thank you. Congratulations for great set of numbers.
Thank you. Thanks so much.
Thank you. We'll take the next question from the line of Chaitanya Shah from Silverline Capital. Please go ahead.
Hi. So my question is regarding the business development that you did this year and that you guided for next year. Now, if you see, there's a quantum jump in the business development. I think FY23 was close to 1,000 crores, and this year was close to 4,000 crores. So shouldn't the launches also see such a quantum jump because you anyways are guiding for another 4,000-5,000 crores of business development for FY25. So just wanted to understand, how you see the launches going in the next 2 to 3 years.
Sure. So eventually it has to get evened out. What is required has to be launched and it has to fall into one sequence, and the numbers eventually have to catch up with each other. It's only about the hard date we are talking about, 31st being the cutoff between financial year 1 and financial year starting the next. So to that extent, there can be some little mismatch here and there. Plus this long-term value creation process we are talking about, and that's very heavy in our product portfolio. There, most of the launches happen in phases. So when we say 1,000 crores top line, maybe it's into 2 or 3 projects of 100 to 100 crores each, that way. And hence they will get launched in sequences, etc. But ultimately you are right. If you are doing 4,000 crores this year, 5,000 crores next year, etc., and then if we keep growing by the same number, 6,000-7,000 crores a year thereafter, if that is the trajectory, obviously this trajectory can match with a lag of a year or so into the new launches, and that's something that we'll be able to achieve. So next year you should be able to see some drastic improvement and enhancements in our launches as well, which will obviously be a result of higher BT that we're doing currently.
Right. And I also wanted to understand, are you seeing, or what are the trends that you're seeing in the land prices, particularly in Gujarat, since, you have a lot of horizontal development there. Are you seeing any sort of investment demand kicking in?
Sorry, we are seeing what? Sorry, investment what?
Are you seeing any investment demand kicking in for your horizontal projects in Gujarat?
And prices they are now comparatively stable. There is still some sort of appreciation happening in some pockets when it comes to raw lands. What is more important is that there is still a dearth of quality products hitting the market. So while in general raw land is still available and it is available at a price which is now looking little more stable, but there is still, in our understanding, an unmet demand for good products, and that's where the traction is coming. That's where the demand is coming, and from an organized player point of view, this is a huge market which was otherwise untapped. To sell land which is not developed in a very great way, with no great amenities, etc., was always there, but people had less confidence in them, and COVID obviously gave a great boost to this product segment. These two things coupled into one meant that organized players who could add value, who could bring in amenities, who are credible, who can show and deliver what they promise on a piece of paper, for that demand is very, very high. Now, demand coming from investors vis-a-vis retail, I think retail is still very heavy. 80-90% of what we sell is sold to people who are middle or upper middle class people. This possibly could be their first investment after their first home, or maybe at best their second investment. So these are not investors who would buy 10 units or 20 units to be sold very quickly at the earliest possible opportunity, etc. But these are more like consumption orientation, to enjoy the property on a weekend, and at the same time also serving this property as an investment option. So this is little better than an investment kind of profile, and hence it is much more sustainable. Generally, the demand is widespread, and it's coming from, as I said, people who are investing into second or third properties, and that's the segment we are tapping and hoping, and it is quite robust at this point in time.
Right. And a lot of these horizontal projects that you've launched in the last 1 or 2 years, the sales velocity has been quite high. So, what are the profit margins that you are expecting on these sales in general? Because, since your cash flows will be faster, I'm assuming it would also improve your profit margins from what you reported in the last 2-3 years, right?
Correct. A horizontal project typically is giving us the last few quarters, and the projects which are configured already and which are there in our portfolio, have a margin of anything between 30 to 40% on top line.
This is the EBITDA margin you're talking about?
Yes. On horizontal. On an average basis, maybe we are more like a 25-26% as a company, but that's a mix of everything. But a decent horizontal project, plotting project should give us more like a 30-35% as compared to 25-80 average that we do otherwise.
Right. And I just have one last question. The project called Rhythm of Life that you've launched, I think, end of this quarter, it shows that the collection is just 1 crore on a 70 crore sales base. So just wanted to understand
Yeah, I did question in state observation. In fact, this was observation even I had before the call. So the what has happened is that this project was launched just 2 days before 31st March. So we just very quickly collected very small amounts as booking amounts, booked them, and subsequently the money has been received, which is 10% of the value that we generate in that sense before we issue the booking file, etc. So it's just a function of we not having enough time to collect the second thing, which happens within 7 to 10 days of booking being received with a nominal check of 1 or 2 lakhs, 3 lakhs here and there. So it's just about 2 days that we had before the year ended.
Okay, understood. Thank you so much. That's it from my side.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. We'll take the next question from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
Hi, sir. Thank you for the opportunity and many congratulations for great set of numbers. Sir, couple of questions from my side. On the page, the presentation slide number 34, the operating cash flow, that is the number is 2,563 crore. Just wanted to confirm this number is the cash flow that is going to incur to the Arvind SmartSpaces after removing the shares of partner. Is that understanding correct?
So this number is after removing every liability and associated liability and potential liability on account of development, etc., including the landlord shares in all the JDs put together, yes.
Okay. And on that point only, that 2,563 crore also includes the revenue that we have expected from projects like NH47 in Ahmedabad as well as the Surat project.
Yeah, everything. I mean, all the projects that have been launched or that have been declared in that sense, yes.
Oh, okay. Thank you for that confirmation. In fact, regarding the project launch guidelines in the FY25, so what we have talked, what we have seen in this year, we have a project acquisition worth 4,000 crores. I think most of the projects are supposed to be launched in this full financial year, except 2 projects which are very larger. First is Surat, second is NH47, which will be launched in the phases, like 2-3 phases, as you mentioned in the Concall. So just wanted to know, I think we were looking around 2,500 to 3,000 crore launches in FY25. Is that, am I missing something, or is there delay with respect to the launches?
So what we are targeting out of 4,000 that we've already added, maybe more like a 3,000 crore worth of launches will happen in any case, but some of them will have phases coming in. So when we say 2,000 and 2,500 thereabouts, that includes only the phases which will come out in this financial year. So to that extent, there might be an ambiguity of a fresh launch to the extent of 500 crores here and there. But broadly, you are right. Out of 4,000 odd crores fresh things which when we start 3,000 worth of projects per se will be launched. Now, how they phase out and how that number gets added can vary to a certain extent, to a small extent. But otherwise, 3/4 of what we've announced will be getting launched as a bare minimum within this financial year. So if we say that Surat is one project and it should be launched, it will be launched or not, the answer is yes. And hence, we can add either 50% of that in today's calculations, or we can add 1,000 crore because versus a project 1,000 crore worth up to that extent. So that's the ambiguity. Otherwise, we obviously are on track to launch most of what we've announced as BD in the last year.
Okay. One last question from my side with respect to the BD. Sir, so as we have guided on the 5,000 crore and around kind of business development in the coming quarters, and in the previous Concall, we have talked our focus will be more towards vertical now. Sir, just want to know how things are working with respect to business pipeline, because if we say we are working more towards the vertical, in order to launch a vertical project, also it takes 12 to 15 months. You need to get the things clear from the local authorities, then doing the base work. So I just want to know how the business is looking with respect to FY26, FY27. Is my understanding correct? Because is my understanding correct? If it may not happen, we may short of the projects in that FY26.
So, dovetailing is important. This year's 5,000 crores obviously will be heavy on verticals. So, in our understanding, we could end up launching a vertical project depending upon its conversion status, etc., within a period of anything like 7 to 9 months, 10 months time. And if we take a mean of 8 months, then whatever we acquire, finalize and sign off latest by the month of June, July, has a decent chance of getting launched within this financial year. And we are on track. At least a couple of projects are such which should be able to meet these deadlines. And those are quite decent sized projects. So to that extent, I think the target is that we launch at least 3 projects vertical within this financial year. And if that happens, the overall proportion of vertical will be quite decent as we look at this thing as on end of the year 25. And thereafter, of course, the pipeline is becoming a little more balanced, and hence you will keep seeing intermittently both vertical and horizontal getting launched in a healthy proportion.
Okay, that's it from my side, Kamalji. Thank you and best wishes always.
Thank you. Thank you, Chaitanya.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We'll take our next question from the line of Akshay Kothari from JHP Securities. Please go ahead.
Thanks for the opportunity.
You're not clearly audible. May I request you to use your handset mode, please?
Am I audible now?
Can you
A
speak?
little better.
Hello, am I audible now?
Yes, please go ahead.
Yeah.
I just wanted to know regarding the Bangalore water crisis which happened of lately. A lot of our projects were on the outskirts. So how do we perceive this as a risk, and how do we plan to any impact of this event?
So, as such, if you really ask me, Bangalore is going through a water crisis the last 5-6 years. And developers know this crisis possibly before anybody else in the city. Of course, residents get impacted. But then we are working in outskirts, we are working in micro markets, etc., etc. And this problem greatly varies from one place to another. So when we say Bangalore, the situation is not very similar in all the areas in Bangalore. There are places where we are lucky. There are micro markets which are luckier. And there are areas which are very, very badly impacted. Good news, as of now, as far as we are concerned, is that because we are a little more heavy on horizontal for the time being, we are not facing that kind of a crisis because it is not very construction oriented. Basically, land development projects and the amount of construction on a per GDV value, etc., is very, very nominal, and hence no major challenges. Having said, this is one challenge that the city is grappling with. Solutions have to be found. And as of now, for developers, it is a function of cost. So if water is not sufficiently available on site or in the nearby sites, etc., then water has to be bought from areas where you got healthy throughput coming from the bore wells, etc., and you have to transport water from those kind of areas into the project. So ultimately, at this point and in foreseeable future, in the medium term, it's a question of cost. Otherwise, there are, it's not a question of life and death. But yeah, it's a serious issue. It's an issue which is getting aggravated by every passing year. We are trying to become as water efficient as we can as developers. For example, 3-4 years back, we were relying very heavily on normal conventional mortar for plastering, which consume a lot of water, not only in the process, but also for post application, usage like curing, etc., etc. And we are replacing those things with the pre-mix mortars, etc., which does not need any water once the whole thing is applied on the walls. To that extent, quite a few innovations are coming, quite a few initiatives are being taken, and conservation efforts are on. We are horizontal comparatively, and hence the problem is less aggravated. But then we'll continue to devise strategies to make sure that there are no obstructions, and we sail through this situation.
Secondly, you did mention that we are repivoting to development of apartments. So regarding that, in which geography would be looking at vertical development? I know we historically used to do, but again, in which geography which will be doing? And are you seeing some sort of seeking of horizontal demand currently, the second holiday homes? And we would be looking for growth in vertical?
No, I mean, I have not understood the question fully, but let me still attempt what I have understood partially. So horizontal, vertical projects will more be concentrated in cities like Bangalore, Pune, and Mumbai, where there is still a very, very healthy, robust demand and consistent demand coming in. So our clear focus is on the city of Bangalore, Pune, and Mumbai when it comes to vertical projects. What is the question really, the other one?
Yeah, so secondly, I was just asking, so are we seeing some sort of, again, in Ahmedabad, we are not looking for a lot of vertical projects. So what is the main reason?
So Ahmedabad, the way we see the market, today, in the proportion that we intend to invest, etc., and the lens that we apply on profitability, etc., it is making much more sense to remain horizontal, a little more heavy on horizontal. Having said that, it's not that we are not evaluating vertical in the market of Ahmedabad. And we are obviously open to everything in every market. Today, it makes more sense to invest in horizontal in Ahmedabad comparatively, and Bangalore is making sense on both the projects. That's why most of the vertical that you'll see coming in the coming quarters will be in Bangalore. But yes, even in foreseeable future, we see more of horizontals happening in the city of Ahmedabad comparatively, and less of vertical. But we are keeping an eye on both in any case in the city of Ahmedabad as well.
Okay. Yeah, that's it from my side. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Kunal Okiramani from Kitara Capital. Please go ahead.
Sir, do you see a lot of resales happening in your project and being invested in new projects?
Normally, we'll have a lock-in period of somewhere like 2-3.5 years when we launch, especially in a horizontal project. Thereafter, of course, resales start happening, and the market is fairly liquid. I mean, we see people exiting, we see people entering in the projects that we would have completed. 2.5 years is the timeline by which we mostly exit, or at least 90% exit in terms of the mass of execution, etc. And by the time we see transactions happening in the project, yes.
How much is the logging period, usually?
It's between 24 months to 30 months.
24 to 30 months. Okay.
So we want to discourage some very short-term investors. I mean, that's not sustainable, and then it starts conflicting with our sales plan, etc. And our mix of investors is not very short-term. They are not investor as we just discussed a moment back. And hence, 24 months lock-in is something people are very happy with. And it serves purpose from every point of view and every stakeholder's point of view.
Sir, and how much percentage is repeat sales? I mean, people from old projects buying into new?
So our referral sale is for the last year in totality is 22%. That is almost like 250 crores out of 1100 crores came from our existing people and references thereof. It's very healthy. And clearly we are seeing repeat investments and investments through references coming from our existing customers across the projects. In fact, it is now contributing 25%. That also is a healthy proportion on the scale we are today. So all in all, digital and referral is very strong, and they are one of the most important contributors to the scale that we are achieving at this point.
Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Kamal Singhal for closing comments. Over to you, sir.
Thank you, and thanks a lot, everybody, for participating in this earnings call of Arvind SmartSpaces. And thanks again for your continued support on this. I hope we have been able to address most of your questions. However, if there is anything missed out on any of your questions, kindly reach out to Vikram, and he will be able to connect with you offline and clarify and give further information as may be required. Looking forward to interacting with all of you in the coming quarters. Once again, thanks a lot for participating. Thank you.
Thank you. On behalf of Arvind SmartSpaces Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.